Hey guys, it's Owen from OptionsCapital here, and today we're going to be talking about the SPY ETF and why we think that there could be a possible correction soon, possibly within a month or two. So this video is going to be broken down into about three parts: the technical analysis, the fundamental analysis, and lastly, what kind of trade strategy or option strategy should you use for this trade. So the first indicator that we look at is a double top forming within this past month. You can see that the first all-time high was about 423, and then it didn't break it. And the second one, now it's coming back up. It's slowly coming back up. It is coming back up. It's also around 423 area, but it's struggling to break that point, which is a double top. And you can kind of see this consolidation in this area, which means that possibly the sellers are selling more than the buyers for the shares. And when that happens, it forms this double top. And this double top is a very bearish sign and could lead to some kind of correction, like a correction here, which is about, I would say, a 15-point, right? Like being generous, a 15-point pullback could be expected here. And to continue with this analysis, you can kind of see the volume here. It's kind of low, right? And it's kind of like decreasing while the stock is going up. And this is called a divergence. And whenever there's a divergence in the market, it's usually a very, very bearish sign and a kind of sign for bearish movement in the future. And I want to go over, look at the stock RSI. It's very, very overbought right now, so that could lead to some selling in the future. And lastly, with the inflation concerns going on currently, that might also pull this stock or this ETF down.
Right, so now I'm going to talk about how we can try to capture this correction and make money with options. So the first thing we want to look at is the implied volatility. As we can see down here, the implied volatility is at a current low relative to the last 3 years. So that indicates that we should be on the debit side of the trade. So we'll just keep that in mind there. And next, what I want to do is establish some price targets. Looking at this historical last few corrections, we'll see that SPY usually drops around $15 per correction, and that is actually being quite generous because usually it drops a lot more. So with that in mind, let's head over to the options chain right here. So I'm thinking that we go out to July 23rd, about a little bit more than a month from here, and we could place a put debit spread, which consists of buying a put at this level, say 418, and selling one to offset the cost. As you can see with this P&L graph, the risk to reward ratio is approximately 1 to 3, which is something that we want in a put. And so the strikes I'm suggesting are 417 and 418, and this would give us the ability to capture the gains if there is approximately $10 correction, which is actually, again, being quite generous looking at the history of the corrections in SPY.